Everyone's talking about a real estate crash, especially right before COVID. I said, we are in a real estate crash. Like, inventory has collapsed.
For those of the audience who don't know Mr. Jason Bible, let me just give a little background. Jason is a Houston, Texan native. He's the founder of Texas Real Estate Radio Network and Chief Information Officer at Mr. Texas Real Estate. Through his companies, plural, he has many. We were discussing it before the show. He has invested in hundreds of single family and multifamily properties. So welcome. Thanks so much for joining us. Always great to have a chat with you.
Yeah, thanks for having me on the show today, guys.
Absolutely. Thanks for joining us. I know you're a data guy and you love talking about markets. 2022. What is the real estate market going to look like?
Well, I'll tell you, everyone laughed in October 2017 when I said, if you think real estate's expensive now, just wait. And now nobody's laughing.
Well, that's because a crash has been coming every year since like 2015, 2017, right?
Bro, I will tell you, you want to have some fun? Go to YouTube, type in any year you want and real estate crash. And there'll be hundreds of videos from gurus and economists saying that the world is going to end and there's this huge crash coming. And the reality is that's just not the case. So we do a big event in February where I let everybody do their predictions in January. And then we host a really big event in February where I give like the real market data and the analysis of what's going to happen in 22. But I'll give you a preview to that show. We're going to have another year of double-digit appreciation, probably 20%. Rates are not going up. Everybody keeps talking about rates going up. They ain't going up. So the old adage is when inflation is high, we can increase rates. Yeah, we could do that in the late 70s, early 80s. We can't do that now. And there's some reasons why. When you increase rates, you pull liquidity out of the marketplace. That's what's causing inflation.
Correct.
All these extra dollars out there bring money back in. Well, back in the 70s, there was no China. Japan wasn't even that big of a factor until the mid to late 80s. So now we have these international markets that they can play the currency game just like we can. So increasing interest rates is not going to pull liquidity off the market. It's just going to import inflation from other countries. So the reality is that we have really no tools to fight inflation, but for one, and that is a recession. So I don't think when people are predicting increases in rates and all that, it's not going to happen. It's just
by increases. Are you thinking like none or nothing substantive?
I could say 50% chance we will actually see a decrease in rates, and then there's a 50% chance we're looking at a quarter point bump, maybe.
Yeah. So either way, it's not changing too much.
It's nothing.
And so you actually said something, and I think this happened in, I guess it was the 70s or 80s, and not that I lived through it, but I've read it, and my grandfather talked about this, was when they did try to increase rates to pull back the market, and they actually caused an inverse reaction of fear of loss. Everyone fearing that they're going to miss out, which if that were to happen here, that's a very real scenario where, oh crap, like I better pay the 3.5% because I don't want to pay 4.5% by waiting next year, which causes home prices to go up even further. Is maybe that part of your calculus on if prices did go up? Now you're going to continue to see those, the appreciation like we've seen over the last 18 months.
You are 100% right. That is exactly what's going to happen. It's called a melt up. So what's going to happen is let's play the scenario as if that's going to happen. Rates will go up if you believe that to be true. There will be a run on hard commodities like real estate like you would not believe. You think it's inflation's crazy now? Wait till people think there's going to be 5, 7, 8, 9, 10% rates on houses. You will see people jump in just to beat the next rate hike. I don't think that's going to happen, but in other words, I don't think the interest rates are going to happen, but what you have said is absolutely 100% correct.
Yeah, that can't really influence the refinance market. I mean, pretty much anyone that could refinance, they've already done that if they could or had the desire to. So really, the only group of people that are enjoying or can enjoy low rates right now are people who are buying, and that has been due to supply issues and other things. That's been low as far as those kind of transactions. But hey, let me know your thoughts on this. I was reading a report recently, I think it was by Redfin, that so Texas, Sun Belt area, it's been hot for a long time. It's been like absolutely red hot over the last 18 months. They predicted a slowdown in growth, and by slowdown it's relative, but a slowdown in growth for those markets, and we're actually going to start seeing similar what's been going with the Sun Belt going into some of the Midwest, Ohio, Tennessee, some of those states, because of now Tampa, Miami, Florida, you get outpriced there. Well, where do you go next? So what are your thoughts there?
Our biggest challenge is home prices rising too fast. That's the real, it's funny. Everyone's talking about a real estate crash. And 2 years ago, I said, and especially right before COVID, I said, we are in a real estate crash on the supply side. Like inventory has collapsed. You're right. We are in the middle of a crash. It's called supply. Everyone forgets there's demand and supply curve. The supply curve. Demand has actually gone up a little bit, but even if it stayed the same, prices are still going to go through the roof.
Yeah, so, we're like, 4 million houses shy?
Yeah, the last report said 5 million houses. And at the time, it was crazy. There were 5 million houses short, and there were 4 million houses in forbearance. And this is when all the guys were saying, like, hey, when all these houses go to foreclosure, there's going to be a real estate crash. I'm like, bro, we're still 1 million houses short nationally.
I've been saying that too. It's like, yeah. Anyway.
So to kind of go back to your point, I think the bigger problem is we have a huge affordable housing problem. So Jamie and I were chatting before the show started, and I know you guys are buying a bunch of rentals. So last week, you guys are in the kind of same business we are. So last week I was goofing around on MLS, and I looked at how many houses, how many months of inventory in the last 30 days that we have of houses below $200,000. You want to guess how many months of inventory we have on the marketplace?
Very, 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 very little. I mean, that market is almost extinct.
It's 3 weeks. A normal market is 6 months. We have 3 weeks below $200,000.
And that house is either it's in a horrible area, or it's burnt down, and it's now still priced. I mean, these are houses that 5 years ago you'd pay 70 grand for. It's just,
that's right.
Now they're 165 and getting multiple offers. We'll tie up with this question. What do you think, or what should investors be focused on? Planning for 2022 and even going further. There's a lot of exit strategies. I know Airbnb is really hot. Multifamily seems to, there's a lot more chatter about multifamily amongst people who used to flip and wholesale, me included. Then you still have your flipping and wholesalers. What should investors, let's say new investors or newer investors?
I think there's only one strategy. By the way, I don't believe the Airbnb boom, by the way. I think there's a lot of people who talk a lot about Airbnb, but who've not been doing this long enough to really understand the numbers. Like they brag during the summer, but then in the winter months, they get real quiet on Facebook.
Yeah. Our lake house doesn't have a lot of December bookings right now. So
yeah. It's funny. I did the QuestCon, the Quest thing, and there was a gal that did Airbnb there, and her and I talked, and I could tell people who have been in this business for a while and who haven't, and her and I compared notes, and she's in North Carolina, and we had the exact same experience. She's like, yeah, this is how it works. And anyway, so I don't believe the Airbnb stuff, but no, don't get me wrong, we have like 50 of them, but it's a lot different than what people put on Facebook. And put that.
Yep.
What should new investors do? Real simple: buy everything at cash flows. And if you're waiting, like I'm waiting for something to happen, I'm waiting to learn this market, just keep in mind that houses in Houston, Texas, on average, in the median, are appreciating $4,000 a month. So every month you wait, it's costing you $4,000 more to buy that rental property.
Not to mention whatever money you have in that savings account waiting is worth less and less.
It's worth 0.5% to 1% less. Yeah. So the reality is, if you're one of these people that are waiting, just turn all the real estate stuff off, because you're really not serious about being in this business.
Yeah.
You're either in right now or it's over. The real estate slowdown that's going to happen in 2025 or 2028. Let's go back to your 70s analogy. When inflation essentially got under control in the 80s, the prices didn't go back to 1970. Like, this is what a lot of people miss. There was 10, 15, 20, 25% inflation for almost a decade. In fact, your money.
Down to it, you don't really lose money unless you sell. By and large, I mean, there's nuances to it, especially with the cash.
Let me make the point for you here. The cash was worth half by the end of the decade. Your money was literally worth half by the end of the decade. But the prices on real assets never went down. Like that's, I think, the part people miss. Oh, if I bought a house in 1978 or 1982 when rates were 18%, it was worth less than when inflation got under control 4 years later. That's not true. What happened is the rate, literally inflation was doing this, and then it just started to flatten out a little bit.
Yeah.
And prices followed right along. They never went back. So if people are waiting for this big crash, this big reset, it's not going to happen.
So many people are still traumatized by 2008, understandably so. So how can folks reach out to you?
mrtxre.com, or shoot me an email, jason@mrtxre.com, and that's it.
Great. Thank you so much for having for joining us.
Yeah, absolutely. Thanks for having me on the show, guys.